All right. Good morning, good afternoon, good evening. It is April the 18th. Let's see what we're up against today. First and foremost, we're going to take a peek at the calendar. Make sure it's a refreshed calendar so we get the latest and greatest. Oops, sorry. The hell. There we go. So we're currently waiting for existing home sales, and then that's it. We're in the clear. This speech will be forthcoming, but we should be, halfway through, if not maybe even completed our trading session by then. So we'll see. Right. The main event was an hour and a half ago, and from the daily perspective, that move an hour and a half ago made the daily candle just slightly more red than it was already. Right? So if we look at the daily, we have a higher high, we have a higher low, and we're pulling back from the high, hence it's red. But we're not going to the south pole. Looking left, we are at support, right? We can see support from 2 days ago, right? So I wanted to see how has this become red, right? And that's a different group of traders altogether, right? So these guys, they had it going up first, right? They had the low picked out first, and then for the last 16 hours or so, we found the high, and then in the last hour and a half, we came back and retested support. All right, so anybody that's trading the news or just trading for the moment, all they're seeing is red, 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 and they've been told to chase the trend. Right? They've been told to be a trend trader, and so in their mind, they have to sell this stuff. Right? In our mind, we're going to take a look with a little bit more detail, and all of a sudden, you can find yourself at support, multiple levels of support, and there might be a bounce forming instead of a break. Right? So our point of view is slightly different because we take time to look to the left instead of anticipating only the future on the right. Right? People are looking to the future. They're thinking, oh my goodness, it's on the way to the South Pole. Right? They have this fear of missing out. We look to the left and we actually see the facts for what they are. We are at support. A bounce is more probable. It's not definite. It's not 100%. It's just more likely. All right. So if it's more likely, I'm going to be buying support in this area, and I'm going to be highlighting the floor and the ceiling and all that good stuff. So here's the floor for now. Here's the ceiling for now. Anything can happen in here, and so we can start highlighting what anything can look like. And that starts to look like a ladder after a while. And then you'll notice the price will start to respect these levels more often than not. And so because of that so-called respect, you can actually start to bet money on what you see here. Right? And so now we've created this ladder environment looking thing. I'm trying to pick off the corner right here. This right there. 1, 2, 3. And then I zoom in. There we go. All right, so we have the current rung which we're resting upon, and we have one below us. And then in my mind, I think we're bouncing off of support, and therefore I think we're going higher. Right, so I've been buying support, and if I'm assuming this is where we start, this is where I start my box, and this is where I want to start to buy. You'll notice I've been trading for about an hour and a half or so. I had someone else to work with just a few minutes ago. And so we had about 15 trades together. Before we get into deep into the weeds, looking at yesterday's trades right here, this is what we did as a group yesterday, right around here. All of our group trades finished green into the target to the pip, a little bit beyond where I suggested you need to start it to sell at 6,700. So starting to sell at 6,700, we sold 2 boxes worth and everything closed profitably. Fast forward to now, we're hoping to revisit some of these prior levels of resistance slash support, right? So we're just recycling through the motions. We're running laps, right? We're just running the laps, right? So I'm a buyer of support, therefore I'll be buying red candles when they're cheap, like this right now, right? Put one trade there, right? You'll notice I have some already because I have, like I said, been trading for about an hour, right? So start with one and we'll put the box on that swing low. And now we wait to see where the break will take place and we can anticipate the next box from there. Just want to step and repeat, recycle a few trades and do it again and again and again and again. Right, so this is what I did first thing as soon as I woke up out of bed. These are the trades that close overnight by themselves. I had opened them before I went to bed. These are trades that I open once we reach the target as suggested. Right, and this is what we did as a group. And this is from the day before. Right, so the process is working, and leaving the casino every day allows you to keep that money you've just made. And therefore, at the end of the week, you have all your profits from daily activities. Right? Instead of over trading, pushing the limit each and every single day, stop when you reach your potential average yield. Right? The box delivers a potential average yield. Right? Spell that out. PAY. Right? That's your paycheck. Trade the same number of boxes on average with the same number of trades on average, and now you've created an environment that delivers an average paycheck. You can engineer this, right? We create the outcome we're looking for. Right? If you don't stop trading, if you don't leave the casino, the likelihood of you giving it back or some of it back is extremely high. It elevates drastically. And we know that because volatility shrinks, it disappears, right? It has you holding the bag for the next 8 hours instead of closing trades in minutes. Right? So understand leaving the casino is a step of the process. It's probably the most important. Right? So red candle, I'll buy right there. Let's see if we can find our way to the top of the box. And maybe up a couple of rungs on our ladder here. Right, this is just with our mind's eye, nothing spectacular. Right, it's just a frame of reference. We're trying to see what the price is capable of doing based on where it's been in the past. Right, really really simple mindset. It's not, nothing. Oh, there's another red candle. I want to buy that. Nothing we're doing asks for, a PhD. This is uh, a game of averages, right? Probabilities. Learning to think in probabilities is where the difficulties are. We're not prepared for this. We're not, you know, designed to, we're not brought up to think in probabilities. Success, success. So yeah, last night trading futures, I was hoping to do it at 7 my time, which would have been 9 o'clock Eastern. I started about 30 minutes later. I got pulled away at the last second, but no, I did do it. It was kind of slow and monotonous, but it is ideal for what I was looking for. This idea of no big volatility to wipe us out. It's a perfect environment to start teaching this. And ideally, every week we can just start from there and compound what we're working on. Right here, you can see how slow, steady, methodical things are. When we're trading futures, it's moving so much quicker. We don't have the time to maneuver the boxes. We don't have the time to think things through. You have to react almost like a knee-jerk reaction, like a muscle memory type deal. Here, this is perfect for you to learn and study and practice and assume this and repair your assumptions that go wrong. I like trading Forex because it gives me the granular approach to risk. I like trading futures because it pays the bills in 20 minutes. All right, come on. We're in the money. In the money. If I see a red candle, I already have, well, I'm left with 6. So I'll wait till we recycle some of them and then I'll go at it with 4 or 5 per box. Perfect. Take a trade if you can, right there. I will. So we're trading after the US news. Right? So the euro fell on the news and we're playing off of that failure, right? We're buying the bottom and we're not thinking about the moon. We're just thinking about one box at a time. And if we're lucky, we get to stack one box at a time, right? So on and so forth. And then selling somewhere, that would be a big ask, wouldn't it? Right? That'd be a huge move, right? But it's not impossible. It's happened before. The market does it over and over and over. Right? This is the part that we, as traders, have to get used to. Right? decision making and then sticking to your guns. You can't waffle about your decision. If it happens to be the wrong decision, realize it as fast as possible and fix it. It's best to get in and fix it. Just don't waffle about should I, should I not, should I, should I not, should I, should I not, should I. Think, oh my God, do something. Right. Waiting to get paid. We've postponed gratification like we do every day. Some of us have been postponing it for years and years and years, and you're now finally getting paid. Right? Some of you have put in a Ivy League education. You've put in so much money that it feels like you've gone to university. But it's really, it's an endeavor. It never ends. Postpone gratification. It's nice when you start to get paid. Right? So if it goes lower, what do we do? Well, if it goes lower, we have boxes of risk that we can use to fix the handful of trades that we already have. Right? So by fix, I mean we're adding more of the same in order to bring that average in line with what the market is capable of achieving. Right? We're trying to get the market to trip over this white line like it did just here right now. Right? If the market trips over my line, I'm in the money. I just want to set the stage so that it happens more often than not. If it goes lower, we build box 2 to fix box 1. Right? And then we'll build box 3 to fix boxes 1 and 2. Ultimately, it's still the same game. We're trying to sell from a more expensive price, similar to what we did yesterday. Right? If we end up going lower, the only time we become a buyer, the only time we quit buying is if we have to make a lower low, which is doubtful. We could make a lower low here, making an outside range. That would be not out of the realm of what the market is capable of doing. Shit like this. Oh, sorry, poop like this. Right? An outside range. We've seen this before. We've seen this many times. Right? The market's favorite tool to get weak hands out of the market. Right? It breaks the previous lows to take out the stops. It breaks the previous highs to take out the stops. Right? And it does so over and over and over until all of the weak hands have given up. Wouldn't be the first time. All right, so create plan A, the most probable outcome, and then create plan B and C and D, right? A whole bunch of alternatives. And then trade the facts. Right? It'll come back. That's the idea, right? It's not going straight to the moon. It's not going straight to the South Pole. It's going to support or to resistance. Our job is to find which one. And those clues are usually in the past. All right, couple more winners. Come on, baby cakes. There we are. Oh, what's with my sound? Oh, I was wearing headphones. There you go. Sorry. So I need a red candle. I want to buy cheap so I can recycle these two trades. There we go. There's one. A little dip lower will allow me to buy a second one. Squawk box is quiet when there's no news. There we are. Right. I have to remind everybody I'm just some guy on the internet, right? This is not financial advice. I'm just trying to show you how you can make it work for yourself.
In 10 minutes time now, at the bottom of the hour, we see the release of the EIA natural gas change. Forecast is for a build of 51 BCF on the prior build of 24 BCF.
Here's support that I'm buying into. And in box number 2, it entitles me to 4 clicks. So there's click number 1. If I'm pushed into this area here, that'll be my click number 2 in my bottom box, which was box number 1. So I guess we'll call it box number 1. I recycled one trade in that bottom box. I'm trying to not borrow from Peter to pay Paul, right? I'm trying to keep the boxes independent of each other. A push down here entitles me to more clicks. If you're considering trading futures, you should think about trading in the evenings, right? That will allow you to circumvent 90% of the news events, you know, like Jerome Powell's and PPIs and CPIs and stuff like that. And the volatility is more consistent. It's more streamlined, predictable. When you're trading US daytime hours, you can get beheaded very quickly. Right, so when we look here on the intraday chart, we're still stuck between the two rungs on our ladder. We haven't made a call yet. We haven't decided which way we're going. Right, on our 5-minute chart, we haven't chosen which way to go yet. We haven't decided what call to action to execute on. So we gotta wait. Selling the euro from '07 would be awesome. Buy. And I'm putting 2 there. So I put 2 clicks on that level, and in doing so, I brought my break even, the white dotted line, to 3 pips away. So I just need a 3 pip move in my favor, and I start to make money again. I guess it's about to happen. We'll see. All right. I don't want to click too many times too early. Right? We want to spread our clicks as evenly as possible. And depending on how you structure your boxes, how you stack them up, you may have 5 in one, 4 in the other. It's not always as even as you want it to be. All right. The unknown. Beautiful place to be. Come on, come on, come on. A little bit of patience.
In 5 minutes time now, at the bottom of the hour, see the release of the weekly EIA natural gas change, forecasted a build of 51 BCF on the prior build of 24 BCF.
I'm curious to see what will come after this speech right here. This is the top of the hour, which would line up with the London fix, the UK fix. And then 30 minutes later, we have bill auctions, which did move the market last month and the month before. All right, so we have to keep an eye on this. And then for those of you trading into the Asian session, we have another speech that might rock the boat a little later. Tomorrow we have a very light day. Some Goldsby speak, and that's it. So tomorrow should be very light for us.
ECB's Hosman says we must remain cautious after a potential first cut. There will likely be a majority for the ECB June rate cut. Hosman says if the Fed doesn't cut, I can't see 3 to 4 ECB cuts this year.
Those of you trading the euro overnight tonight, be careful of that PPI number. That may propel you guys back south.
ECB's Hosman says the ECB couldn't look through potential oil price shocks.
If we go a little bit lower, let's say this level here. Somewhere right around there, or maybe here. I'll buy more. Be careful, approaching the weekend, all the risk elements that are in play. Gold, if you're trading gold, be very cautious there. There's too much stuff going on around the planet to be attempting to sell. If it falls, look at it as an opportunity to buy. Beautiful. Can we recycle some of this?
Senior IMF official says in countries where inflation is low, notably China, there is room to support demand through monetary policy.
Red candle, take one back. This was one trade, and so I took one back. I'll put 2 on there. Having too much fun. You know, when the plan just works. This is the problem with a strategy that has a really, really high win rate like this. You'll be tempted to bump up your leverage.
1 minute remaining for the EIA natural gas change.
And then if you start to bump up your leverage, you just need one misstep and everything's thrown off. And by misstep, I'm talking about your sizing, right? If you don't adjust your sizing appropriately, and it's not a factor of 5, right? It's not linear. It's more like logarithmic. And so you have to be extremely diligent when you start gearing up. Right? This is why you want to start in first gear, right? In low leverage, and then add to your winners.
10 seconds.
10 seconds. If you're an oil trader, be careful. Boom.
Build of 50 BCF, a build of 50 BCF. That's lower than the expected build of 51 BCF.
There you go. It has not rocked our
Some
world.
slight strength and whipsawing in natural gas here.
All right, so this is what they're speaking about right here. And just so we take a peek at our Dixie like we do every day, we have the dollar index approaching resistance. We have yields approaching resistance, and that bodes well for a euro that should eventually rotate in our favor. All right, so we're building a position that we can eventually sell into up here. More like that. All right, 5 minutes. We're now attempting to climb up the ladder. And we've closed a few trades. I don't want to put the Peter trades into the Paul box. I don't want to borrow from Peter to pay Paul. And so I'm just going to wait to see if I can recycle the existing trades instead. If we go back down, I can recycle those. It's a balance, right? We're balancing the risk between what we're willing to accept and what we're willing to take on as risk, you know. And fixing a bad trade involves closing a loser. And that's kind of what breaking even forces you to do. It structures the loss so it's not as damaging, right? But it's still half and half. And that's why in this methodology, breaking even is a target, where in swing trading, breaking even is not mentioned unless it's to move their stop loss. Come on. All right, we just want to see a little bit of wiggle in our favor, ever so slightly. Nothing fancy, nothing too big. The thing with trading in this environment, the bars, as you can see, 2 pips. My target is 3 pips. This forces me to sit on my hands and wait like 4 or 5 minutes, where when the bars are bigger, we make almost instant money. Instant money is risk free, like it's in and out. this exposes me to more risk. And what I was doing last night exposes me to risk for 8 hours, right? So the problem with exposure to risk for 8 hours is stuff like this will tap you out, right? This was 12 pips. If you have a 10 pip stop, you're out of the game, right? If we have a 18 pip stop, which is 2 boxes, you would have survived this. If you have a 4 box or 36 pip stop, you would have clearly survived it, right? So following industry standard has us thinking we're doing the right thing. It's safe, but it's putting you in harm's way. Right? It enables you to walk around with a big bullseye on your back and come and get me, come and get me. Instead of having a stop loss, it's called a long tail stop. This is to protect against a long tail, like a wick, right? Something that is temporary. And it's there only to protect the account, right? We engineer how we come out of this. It's not the stop loss's job. Well, I guess it is, but it's my job primarily to do that before the stop loss gets to it, right? The stop loss is like the handbrake in the car. I don't drive around with the handbrake on, right? The handbrake is rest. Right, so how many trades do we have? I have 6. I have to back off 1. I have to close 1 before I can open or consider opening. All right. There we go. Couple more. There we go. Now I need red candles so I can recycle some of these trades. Right? Considering this is actually a real break now, I'm just going to move the box onto that real break. And now we can start to expect / anticipate this next box. Right? This assumption is flawed or fails if the price comes back into the lower box. Right? So what if? What if? Sorry, I'm trading on my other platform at the same time. There we go. All right, let's pull that back and recycle some of this.
Senior IMF official says
Whoa.
Japanese authorities are committed to flexible exchange rate regime
Gee
that allows
whiz.
exchange rates to act as a shock absorber to support monetary policy objective of price stability.
There's a bunch of group in that office. There's a group of men in that office, and they all have a different volume setting on their microphone. I noticed that day before yesterday. I was wearing headphones. There we are. See how we're buttoning into resistance here, right? / support. It's resistance for us right now, but it was support hours ago. Right, so we have to see what comes of this, the top of the box here. Red candle, I buy. I buy 2. A lot of people are selling gold right now. All right. Red candle pullback. One, two. So now I have all four. Yes, I have all four clicks in that box up there.
Senior IMF official says, like other countries in the region, Japan's currency moves to a large extent reflecting increasing interest rate differentials with the US.
I'll put click number 5 there. And then wait it out. All right, remember our potential average yield, right? It all depends on the opportunities presented to us. Some boxes have way more trades than others. Some boxes, the price just flies right through and you get 0 trades in that box. In others, you just spend the whole hour going sideways and you get a whole bunch of trades in that box, right? So situationally, everything's different. Here's another bounce at support right here. Let's see if that will make us a pretty penny. Keeping it simple, right? Keeping it cheap, keeping it manageable. We want to be panicked. We don't want to be panicked. We want to be stress-free, right? We don't want to, when you're painted into a corner, you want to be able to think your way out. Right? The plan is already there. You've got plan B, you've got plan C, plan D. You're just told which one to execute, right? You're trading the facts. We're not creating alternative facts or trading alternative facts. Boy, oh boy. It's a matter of time. And we've been misled. Remember, we've been told to not bother looking at the x-axis, even though it's on every one of our chart. Right? Or just focus on price. Right? Buy low, sell high, just wait. No one's told us what we were waiting for. And now you see profits come, you see profits go, and you don't know why. Well, because it came and went in front of your face. Right? Lower your expectations and raise your personal standards. Right? Lower the bar as low as the bar can go. So instead of begging for 200, ask for 2 or 3, maybe 100 times. And then instead of, begging and praying for no losses, commit to one standard stop loss and do everything you can to avoid it. Lower the bar and raise your standards. There we go. All right, top of the hour. I think I'll let you guys be. We'll call it a day after this. All right, so we covered the top-down analysis. We looked at the calendar. We saw ourselves at support, and intraday, everybody is thinking about selling, 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 selling because it's on the way to the South Pole, where in reality, it's at support and it's bouncing. And we made money from reality instead of some delusion. All right, I think we've done way more than 20 pips. We've probably done more than 20 trades. And we did it all in 45 minutes. You won't hear me complaining. Opportunity to buy right there. No, that's my fifth. I have to stop. I have to slow down. Gots to relax. A little bit more. Come on, pour some sugar. Oh, the mystery just continues on. Well, ladies and gents, this will conclude our broadcasting for the day. This is it. Success once again. All right. Enjoy yourselves. Trade safe, trade small. I'll see you tomorrow, same time. We'll keep doing the same thing. If you have trades pending right now, keep them open. Don't touch your stops. Don't touch your targets, right? And expect or anticipate, I should say the word, anticipate the structure to be tested, right? Test the highs, test the lows. That's the idea behind the ladder. You know, just figure out what rung you're resting upon and see if you're making it to the next one. All right. Talk to you tomorrow. Bye-bye.